Every news headline about Greenland tells you the same story. Trump wants to buy it. Denmark says no. Europeans are angry. Greenlanders are protesting. NATO is fracturing. It's a geopolitical crisis, a diplomatic disaster, a threat to the Western alliance. But here's what none of those headlines are telling you. Why? Why would a US president risk destroying America's oldest alliances over an ice-covered island with 57,000 people? Why would Trump threaten military force against a NATO partner? Why would China invest billions in Arctic infrastructure? Why would Russia position military assets along Greenland's periphery? The answer isn't about national security abstractions or vague strategic positioning. It's about money. Specifically, it's about $12 trillion in resources that are currently locked under Greenland's ice, resources that will reshape the global economy, determine which nations dominate the 21st century, and create the biggest wealth transfer in human history. And the race to control these resources is happening right now, while media coverage focuses on Trump's tweets and diplomatic tensions. This is the story they're not telling you. This is about the $12 trillion Arctic takeover that will change everything. Let's start with that number, because $12 trillion is almost incomprehensible. To put it in perspective, that's roughly half the annual GDP of the United States. It's more than the entire economy of China. It's 3 times the GDP of Germany. It's enough money to pay off 1/3 of America's national debt. And according to geological surveys and resource assessments, that's a conservative estimate of the total value of extractable resources currently under Greenland's surface and in surrounding waters. But where does this number actually come from? It's not a single deposit or resource type. It's the combined value of multiple resource categories that make Greenland potentially the most valuable piece of undeveloped territory on Earth. Let's break down the math, because understanding what's actually under Greenland's ice explains everything about why this crisis is unfolding right now. First category, rare earth elements. These are 17 metallic elements with names most people have never heard: neodymium, dysprosium, terbium, europium, and 13 others that are absolutely critical to modern technology. Every smartphone contains approximately 16 different rare earth elements. Every electric vehicle requires 30 to 50 kilograms of rare earths, primarily for the permanent magnets in electric motors. Every wind turbine needs 200 to 600 kilograms of neodymium and dysprosium. Every advanced military system, F-35 fighter jets, precision-guided missiles, satellite systems, radar arrays, depends on rare earths for electronics and sensors. There is no substitute for these elements in most applications. They're not called rare because they're necessarily scarce in the Earth's crust, but because they're rarely found in concentrated, economically viable deposits. China currently controls approximately 90% of global rare earth processing capacity, giving Beijing a stranglehold on the entire technology supply chain. The global rare earth market is currently valued at around $7 billion annually, but that number is projected to exceed $20 billion by 2035 as electric vehicle production expands and demand for green energy infrastructure accelerates. Now here's where Greenland enters the picture. The Kvanefjeld deposit in southern Greenland contains an estimated 100,000 tons of rare earth oxides, making it one of the world's largest known rare earth deposits. The Tanbreez project contains over 4 million tons of rare earth oxides. Multiple other sites across southern Greenland show similar geological signatures. Conservative estimates suggest Greenland's total rare earth reserves could be worth between $500 billion and $1 trillion at current market prices. But that's using today's prices and today's demand. As the world transitions away from fossil fuels and toward electric vehicles, renewable energy, and advanced electronics, rare earth demand is projected to increase by 400 to 700% by 2050. At those demand levels and the corresponding price increases, Greenland's rare earth deposits could be worth $3 to $5 trillion. That's the first piece of the $12 trillion puzzle. Second category, uranium. Greenland's uranium deposits are less discussed, but potentially more valuable in the long term. The Kvanefjell deposit alone contains the world's second largest uranium resource, approximately 229 million pounds of uranium oxide. Several other sites across Greenland show significant uranium concentrations. Uranium prices are currently around $65 per pound, making Greenland's known uranium reserves worth approximately $15 billion at current prices. But here's the critical context. The world is entering a nuclear renaissance. As nations scramble to reduce carbon emissions while maintaining reliable baseload power, nuclear energy is experiencing a massive revival. Uranium demand is projected to increase by 50 to 70% by 2040, as dozens of new reactors come online in China, India, and across the developing world. Small modular reactors, the next generation of nuclear technology, are being deployed globally. Uranium prices in a high-demand scenario could easily triple or quadruple from current levels. At projected future demand and prices, Greenland's uranium could be worth $60 to $80 billion. Third category, oil and natural gas. This is where the numbers start getting truly massive. The United States Geological Survey conducted extensive assessments of Arctic resources and estimates that the Arctic region contains approximately 90 billion barrels of undiscovered oil and 1,670 trillion cubic feet of natural gas. Greenland's territorial waters and exclusive economic zone contain an estimated 31 billion barrels of oil and 86 trillion cubic feet of natural gas. At current prices, roughly $80 per barrel for oil and $3 per thousand cubic feet for natural gas, that's approximately $2.5 trillion in oil and $260 billion in natural gas. But these are current prices in a relatively stable market. Energy prices are notoriously volatile, and as global demand continues to increase while conventional reserves decline, Arctic oil and gas become increasingly valuable. In a high-price scenario, which is likely as Middle Eastern reserves deplete and geopolitical tensions restrict supply, Greenland's hydrocarbon resources could be worth $4 to $6 trillion. Fourth category, minerals and metals. Beyond rare earths and uranium, Greenland contains massive deposits of zinc, lead, gold, iron ore, rubies, diamonds, and other valuable minerals. The Citronen Fjord zinc-lead deposit is one of the world's largest undeveloped zinc resources. Gold deposits across southern Greenland have attracted exploration interest for decades. Iron ore reserves in the Isua region could contain billions of tons of high-grade ore. Collectively, these conventional mineral resources are estimated to be worth between $300 billion and $700 billion, depending on extraction costs and future commodity prices. Add in the gemstone deposits. Greenland produces some of the world's highest quality rubies, and you're looking at another $100 billion in potential value. Fifth category, and this is where it gets really interesting, the Arctic shipping routes. Climate change is opening new maritime passages that could revolutionize global trade. The Northern Sea Route along Russia's Arctic coast and the Northwest Passage through Canadian waters could eventually cut shipping times between Asia and Europe by up to 40% compared to the Suez Canal route. Approximately $1 trillion in goods currently flow through the Suez Canal annually. If even 20% of that traffic shifts to Arctic routes, a conservative estimate once the passages become reliably navigable, that's $200 billion in annual trade flowing through waters adjacent to Greenland. Over a 30-year period, controlling or taxing access to these routes could generate revenue in the trillions. Greenland sits at the strategic gateway to these routes, giving whoever controls the island the ability to influence, regulate, or tax this maritime traffic. When you add up all these categories, rare earths at 3 to 5 trillion, uranium at 60 to 80 billion, oil and gas at 4 to 6 trillion, conventional minerals at 300 to 700 billion, and the strategic value of Arctic shipping routes, you get to that $12 trillion figure. And critically, this is a conservative estimate based on known deposits and current technology. As climate change continues to melt Greenland's ice sheet, previously inaccessible regions will become available for exploration and development. There are almost certainly additional resource deposits that have not been discovered yet, simply because they're under a mile of ice that nobody can access. The actual total value of Greenland's resources could be 15 trillion, 20 trillion, or more. So if Greenland has always had these resources, why is this crisis erupting now? Why didn't the United States try to acquire Greenland decades ago when it would have been easier? The answer is convergence. Three massive trends are colliding simultaneously in the 2020s, creating a once-in-a-century opportunity to access resources that were previously either unreachable, uneconomical, or unnecessary. Understanding this convergence explains why Trump, China, Russia, and European nations are all suddenly focused on an island that was largely ignored for the past century. The first trend is climate change physically opening access to previously unreachable resources. Greenland's ice sheet is melting at an accelerating rate. The island loses approximately 280 billion tons of ice annually, and this rate has tripled since the 1990s. This melting is an environmental catastrophe from a climate perspective, but from a resource extraction perspective, it's opening opportunities that didn't exist before. Mining operations that would have been impossible 20 years ago because they were under permanent ice are now becoming viable as the ice retreats. Coastal areas that were frozen year-round now have ice-free periods that allow for shipping and offshore drilling. Mountain ranges that were covered in glaciers are exposing mineral deposits that can be accessed with conventional mining techniques. The Northwest Passage, the shipping route through Arctic waters north of Canada, was largely impassable until recently. Now it's navigable for several months each year, and projections suggest it could be ice-free year-round by the 2040s or 2050s. This physical opening of the Arctic is not a future hypothetical. It's happening right now, and it's accelerating. Resource companies and governments that position themselves in the Arctic now will have decades of advantages over those who wait. This creates urgency. The window to establish presence, claim resources, and build infrastructure is open now, and everyone knows it. The second trend is the green energy transition, creating unprecedented demand for specific minerals. This is the piece of the puzzle that most climate activists don't want to acknowledge. Transitioning away from fossil fuels requires absolutely massive amounts of mining and mineral extraction. Electric vehicles require 5 times as much mineral content as conventional gasoline vehicles. A single electric vehicle battery requires approximately 80 kilograms of lithium, 14 kilograms of cobalt, 40 kilograms of nickel, and 45 kilograms of rare earth elements. Wind turbines require enormous amounts of steel, concrete, copper, and rare earths, about 600 kilograms of rare earths per megawatt of generation capacity. Solar panels need silver, copper, silicon, and various rare elements. The International Energy Agency estimates that meeting global climate targets will require a 400 to 600% increase in mineral production by 2050 compared to current levels. Where will all those minerals come from? Current mining operations cannot possibly meet this demand. New mines take 10 to 20 years to develop from discovery to production. The world needs massive new sources of copper, lithium, rare earths, nickel, and cobalt, and it needs them within the next 10 to 15 years. Greenland represents one of the few places on Earth where multiple critical mineral deposits exist in quantities large enough to meaningfully impact global supply. The third trend is the fracturing of global supply chains and the end of the China provides everything era. For the past 3 decades, the world economy operated on the assumption that China would manufacture everything, process all the raw materials, and export finished goods globally at competitive prices. This arrangement is collapsing due to US-China tensions, supply chain vulnerabilities exposed by COVID, and growing concerns about strategic dependencies. The United States and European nations have suddenly realized that China controlling 90% of rare earth processing gives Beijing enormous power over Western economies. China's temporary rare earth export restrictions in 2010 and again in 2025 demonstrated this vulnerability. Western governments are now desperately trying to build alternative supply chains for critical minerals. But you can't build alternative supply chains without alternative sources of minerals. Even if you build processing facilities outside China, you still need raw materials to process. Greenland represents the single largest potential source of critical minerals outside Chinese control. It's geologically rich, politically stable compared to many mining regions, and geographically close to both North American and European markets. For Western nations trying to reduce dependency on China, Greenland is the most strategically valuable piece of real estate on the planet. These three trends, physical access opening due to climate change, skyrocketing demand from green energy transition, and the strategic imperative to diversify away from Chinese supply chains, are converging right now in the mid-2020s. This convergence creates a narrow window of opportunity that won't last forever. Climate change will continue opening the Arctic, but competitors are also moving in. Demand for critical minerals is exploding right now, not in 20 years. Supply chain diversification is a current strategic priority, not a future consideration. Whoever establishes dominant position in Greenland now will control these resources for generations. That's why Trump is willing to risk NATO alliances. That's why China is investing billions in Arctic infrastructure. That's why this crisis is happening at this specific moment. The $12 trillion in resources were always there, but they're only accessible and strategically critical right now. Let's drill deeper into rare earth elements, because this is the single most critical resource category and the one that explains the most about why Greenland matters so much. If you understand the rare earth situation, you understand everything about 21st century resource competition. Rare earth elements are a group of 17 metallic elements that have unique magnetic, phosphorescent, and catalytic properties that make them irreplaceable in high-tech applications. The most important ones are neodymium, praseodymium, dysprosium, terbium, europium, and yttrium. These names mean nothing to most people, but they're in literally everything electronic. Your smartphone screen uses europium and terbium for the phosphors that create colors. The speakers use neodymium magnets. The vibration motor uses another neodymium magnet. Your laptop hard drive uses neodymium magnets for the read-write heads. Every LED light uses europium and terbium. Every electric motor in an electric vehicle uses neodymium iron-boron magnets, the strongest permanent magnets ever created. Without these magnets, electric vehicles would be substantially heavier, less efficient, and more expensive, because you'd need much larger copper-wound electromagnets to achieve the same power. There is currently no substitute for rare earth permanent magnets in electric vehicle motors. None. Research continues into alternatives, but nothing commercially viable exists yet. Wind turbines use the same neodymium-based permanent magnet generators. A single 3-megawatt offshore wind turbine contains about 600 kilograms of rare earth elements, primarily neodymium and dysprosium. Modern wind farms have hundreds of turbines, meaning a large wind farm requires hundreds of tons of rare earths. The entire green energy transition depends on rare earth elements. Then there's the military dimension. The United States military is the world's largest consumer of rare earth elements. The F-35 fighter jet, America's most advanced fighter, contains over 400 kilograms of rare earth elements throughout its sensors, avionics, electronic warfare systems, and flight control computers. Each Aegis destroyer contains over 2 tons of rare earths. Precision-guided missiles use rare earth magnets for guidance fins and control surfaces. Night vision goggles use rare earth phosphors. Satellite systems use rare earths throughout their electronics. Radar arrays use rare earth magnets. The entire American military apparatus depends on a steady supply of rare earth elements, and nearly all of them currently come from or are processed by China. Here's the terrifying strategic situation. China produces about 60% of the world's rare earth minerals and processes over 90%. Even rare earths mined in the United States, Australia, or other countries typically get shipped to China for processing because nobody else has invested in the complex, expensive, and environmentally challenging processing infrastructure. This means every advanced military system, every electric vehicle, every wind turbine, and every smartphone on Earth depends on Chinese processed rare earths. Let that sink in. The entire American military, the entire green energy transition, and the entire global technology industry depends on China choosing to continue exporting rare earths. and China has demonstrated multiple times that it's willing to weaponize this dependency. In 2010, during a territorial dispute with Japan over the Senkaku Islands, China temporarily cut off rare earth exports to Japan. Japanese manufacturers panicked. Rare earth prices spiked by over 300%, and Tokyo was forced to back down diplomatically. China proved it could economically coerce one of the world's largest economies simply by controlling rare earth supplies. In 2019, during the US-China trade war, Chinese officials explicitly threatened to restrict rare earth exports to the United States as retaliation for American tariffs. Chinese state media published articles with headlines like, "Don't say we didn't warn you," about potential rare earth restrictions, language that Chinese media historically uses before military action. The message was clear. China could destroy American high-tech manufacturing and military production whenever it chose. In April 2025, China did implement partial restrictions on several rare earth exports following Trump's Liberation Day tariffs. Those restrictions were later lifted as part of the trade truce, but the vulnerability was exposed again. American defense contractors, technology companies, and automakers suddenly realized their entire supply chains could be severed by Chinese government decree. This is not a theoretical vulnerability. It's a demonstrated reality that could be deployed at any moment. The Pentagon has designated rare earth elements as critical to national security and has been trying to develop domestic supply chains for over a decade. But here's the problem. The only significant rare earth mine in the United States is the Mountain Pass facility in California. Even though this mine extracts rare earths on American soil, the ore gets shipped to China for processing because the United States shut down its rare earth processing facilities in the 1990s due to environmental regulations and cost competition from China. Building new processing facilities in the United States would cost billions of dollars and take at least a decade. Meanwhile, demand is exploding. The Pentagon's own assessments conclude that American military production would cease within 12 to 18 months if China fully restricted rare earth exports. Defense contractors would run through existing stockpiles, and then F-35 production would stop. Missile production would stop. Satellite launches would stop. It would be a strategic catastrophe, worse than any oil embargo, because you can at least substitute energy sources. There's no substitute for rare earth elements in most applications. This brings us back to Greenland. Greenland's rare earth deposits represent the only large-scale source of these critical elements outside Chinese control that could realistically be developed within the next 10 to 15 years. Australia has rare earth deposits, but they're smaller and still require Chinese processing. Africa has deposits, but political instability and infrastructure challenges make large-scale development extremely difficult. Russia has rare earths, but Russia and China are strategic partners, so Russian rare earths don't provide supply chain security from Chinese control. Greenland is different. It's politically stable as a Danish territory, with aspirations for independence. It's geographically close to North American and European markets. It has massive deposits in multiple locations. And critically, its deposits include heavy rare earths like dysprosium and terbium, the most valuable and strategically important elements that are especially scarce globally. If the United States or Europe could develop Greenland as rare earth deposits and build processing facilities to handle the ore, it would break China's monopoly and provide supply chain security for the green energy transition and military production. That's worth almost any cost, including risking diplomatic relations with Denmark. That's why rare earths are the central piece of the $12 trillion puzzle. Without rare earth security, the United States cannot maintain its technological edge, cannot transition to green energy, and cannot ensure its military readiness. Greenland offers the only realistic solution, and the window to secure it is now. Now, let's talk about Arctic shipping routes, because this dimension of Greenland's value is less discussed, but potentially more transformative than the minerals underneath the ice. Climate change is opening maritime passages through the Arctic Ocean that have been largely impassable for human history. These new routes will fundamentally reshape global trade flows, and Greenland sits at the strategic choke point, controlling access. To understand the magnitude of this change, you need to understand how global shipping currently works. The vast majority of trade between Asia and Europe flows through the Suez Canal, the narrow waterway in Egypt that connects the Mediterranean Sea to the Red Sea and Indian Ocean. About 15,000 ships transit the Suez Canal annually, carrying approximately $1 trillion in goods, roughly 12% of global trade. The canal is crucial to global commerce, and any disruption causes massive economic ripples. When the container ship Ever Given got stuck in the Suez Canal for 6 days in 2021, it cost global trade an estimated $400 million per hour. That's the economic value flowing through a single canal. But the Suez route is long. A container ship traveling from Shanghai to Rotterdam, one of the world's busiest trade routes, covers approximately 11,000 nautical miles through the Suez Canal, taking roughly 33 days. There's an alternative route around the Cape of Good Hope at the southern tip of Africa, but that's even longer, about 13,000 nautical miles and 38 days. For over a century, these were the only realistic options for shipping between Asia and Europe. The Arctic was impassable due to ice, so ships had no choice but to go south. Climate change is changing this reality. Arctic sea ice has declined by roughly 40% since the 1980s. The Northwest Passage through Canadian Arctic waters and the Northern Sea route along Russia's Arctic coast are becoming increasingly navigable. In some recent summers, these passages have been completely ice-free for weeks at a time. Projections suggest that by the 2040s or 2050s, Arctic routes could be navigable year-round for ice-strengthened vessels, and by the 2060s or 2070s, they might be accessible to conventional container ships for much of the year. Here's why this matters. The Arctic route from Shanghai to Rotterdam is only about 7,000 nautical miles, 4,000 miles shorter than the Suez route. This translates to roughly 22 days of travel time instead of 33 days. That's a 35% reduction in travel time, which means ships can make more trips per year, fuel costs decrease, and time-sensitive cargo arrives faster. For the shipping industry, this is revolutionary. Maersk, the world's largest container shipping company, has already conducted trial voyages through Arctic waters. Russian shipping companies are expanding Arctic operations. Chinese state-owned shipping firms are investing in ice-capable vessels specifically designed for Arctic routes. The shift is beginning, and as the passages become more reliably navigable, traffic will increase exponentially. Industry analysts estimate that by 2050, 20 to 30% of Asia-Europe trade could be flowing through Arctic routes instead of the Suez Canal. That would be $200 to $300 billion in annual trade shifting north. Over 30 years, that's $6 to $9 trillion in cumulative trade flowing through Arctic waters. Now here's where Greenland becomes critical. The island sits at the junction between the Northwest Passage and the Northern Sea route. Ships coming from East Asia heading to North America or Europe must pass near Greenland's waters, regardless of which Arctic route they take. Greenland's territorial waters and exclusive economic zone cover nearly 900,000 square miles of strategically vital ocean. Whoever controls Greenland controls the ability to regulate, monitor, and potentially tax or restrict Arctic maritime traffic. Think of it as the new Panama Canal. Except instead of a canal that can be physically controlled with locks and choke points, it's an ocean passage where control comes from air and naval bases, radar installations, and the legal authority to regulate traffic in territorial waters. The United States currently maintains Thule Air Base in northwestern Greenland, which would be strategically positioned to monitor and control Arctic shipping. But that base operates on Danish permission, and if Greenland achieves independence and doesn't align with American interests, access could be revoked. China understands this dynamic perfectly. Beijing has explicitly incorporated the Arctic into its Belt and Road Initiative through what it calls the Polar Silk Road. Chinese state-owned companies have invested in Arctic shipping infrastructure, built ice-capable vessels, and positioned themselves to benefit from Arctic route development. Russia is heavily investing in Northern Sea route infrastructure. including icebreakers, port facilities, and naval bases along its Arctic coast. Both Moscow and Beijing see Arctic shipping as a strategic priority that will generate trillions in economic value over the coming decades. Europe is also deeply concerned about Arctic access. If significant trade shifts from the Suez Canal to Arctic routes, European ports need to be connected to those routes. Greenland's position makes it valuable to European shipping interests as a potential hub for transshipment and logistics. The economic value of Arctic shipping routes is difficult to precisely quantify, but consider the analogy to existing strategic waterways. The Panama Canal generates over $3 billion annually in toll revenue. The Suez Canal generates about $9 billion annually. These are relatively narrow canals where every ship must pay a toll. Arctic passages are open ocean, so direct toll collection wouldn't work the same way, but controlling the surrounding territory provides opportunities for port fees, logistics services, search and rescue operations, environmental regulation, and military positioning that could generate similar or greater economic value. More importantly, controlling Arctic access provides enormous strategic leverage. A nation that can threaten to close or restrict Arctic shipping routes holds power over trillions in annual trade. This is the same reason the United States has historically been obsessed with controlling Panama and maintaining naval presence in key straits and passages worldwide. Maritime choke points are sources of economic and military power. The Arctic is becoming the most valuable maritime choke point of the 21st century, and Greenland is the key to controlling it. This is why the shipping dimension of Greenland's value, while less immediately extractable than minerals, potentially represents the largest component of that $12 trillion figure over the long term. Arctic routes will be in use for centuries, generating ongoing strategic and economic value. Once established, whoever controls the infrastructure and territory adjacent to these routes will collect economic rents for generations. That's worth fighting for, and every major power knows it. Let's turn to the hydrocarbon resources, oil and natural gas. Because despite the push toward green energy, Arctic oil and gas will be economically critical for decades and represent trillions in value. The United States Geological Survey's comprehensive Arctic assessment estimates that the region contains about 22% of the world's undiscovered oil and gas resources. Greenland's offshore areas are believed to contain approximately 31 billion barrels of oil and 86 trillion cubic feet of natural gas. To put those numbers in perspective, 31 billion barrels of oil is roughly equivalent to the entire proven reserves of the United States. At current prices of around $80 per barrel, that's $2.5 trillion worth of oil. The natural gas reserves represent about 2% of global known reserves, significant but not transformational on their own. However, the value of these resources depends heavily on future energy prices, which are notoriously difficult to predict, but likely to trend upward. Despite the push toward renewable energy, global oil demand has continued to grow and is projected to remain strong through at least 2040. The International Energy Agency estimates that even in aggressive climate scenarios, the world will still need about 60 to 70 million barrels of oil per day in 2050, down from current levels around 100 million, but still massive demand. Where will that oil come from as conventional fields in the Middle East, North America, and Russia deplete? The answer is increasingly frontier regions like the Arctic, deep offshore deposits, and unconventional resources. Arctic oil becomes more attractive as easier-to-access oil elsewhere runs out. Additionally, Arctic oil development creates a strategic diversification away from Middle Eastern supply. For decades, the United States and Europe have been dependent on oil from politically unstable regions, the Middle East, Venezuela, parts of Africa. This dependency creates vulnerability to supply disruptions from wars, revolutions, terrorism, or deliberate production cuts by hostile nations. Arctic oil from Greenland would flow to markets in North America and Europe without transiting any potentially hostile choke points or territory. That supply security has strategic value beyond just the commodity price. When you factor in this strategic premium, Arctic oil could be worth substantially more than current market prices suggest. Now here's the controversial part that climate activists do not want to acknowledge. Developing Arctic resources and the green energy transition are not contradictory. They are interconnected. Building wind farms, solar arrays, electric vehicles, and battery storage requires enormous amounts of energy and industrial production. You need oil and gas to manufacture solar panels, to mine the metals for wind turbines, to produce the plastics and materials for electric vehicles, and to generate the electricity for mining and processing operations. The green energy transition doesn't mean zero fossil fuel use. It means shifting fossil fuels from energy generation to industrial feedstocks and manufacturing inputs. Arctic oil and gas will play a crucial role in enabling the green transition by providing the energy needed to build renewable infrastructure. This is the contradiction at the heart of climate policy. You need hydrocarbons to transition away from hydrocarbons. Greenland's natural gas reserves are particularly interesting in this context. Natural gas is the cleanest fossil fuel, producing about half the carbon emissions of coal per unit of energy. As countries phase out coal power plants, many are replacing them with natural gas as a transition fuel before fully renewable systems can be deployed. Europe is especially desperate for natural gas following the disruption of Russian gas supplies after the Ukraine war. European nations are paying premium prices for liquefied natural gas from the United States, Qatar, and other suppliers. Greenlandic natural gas, if developed, could supply European markets with significant volumes, reducing European dependence on potentially hostile suppliers. This makes Greenland's gas reserves strategically valuable, even in a decarbonizing world. The natural gas wouldn't be used for a century. It would be a bridge fuel for the next 20 to 30 years as renewable infrastructure is built out. That's still long enough to generate hundreds of billions in revenue. Offshore oil and gas development in Greenland faces substantial challenges. Arctic waters are harsh, ice can damage platforms and pipelines, environmental risks are high, and costs are much greater than conventional development in warmer regions. Multiple oil companies have explored Greenland's waters over the past 2 decades. Cairn Energy, ExxonMobil, Chevron, and others conducted exploratory drilling. Results were mixed, and most companies walked away because the economics didn't justify development at relatively low oil prices. But here's what's changed. Technology has improved dramatically, making Arctic operations more feasible. Floating production platforms, subsea infrastructure, and ice management systems have advanced significantly. More importantly, as conventional oil reserves deplete and prices rise, Arctic development becomes economically viable. At oil prices above $100 per barrel, which is likely as global supply tightens, Greenlandic offshore fields become profitable to develop. Several fields that were considered uneconomical at $60 oil become viable at $100 oil. There's also the uranium dimension connected to energy. Greenland's uranium reserves could become vastly more valuable as nuclear power expands globally. We're entering a nuclear renaissance driven by the need for reliable, carbon-free baseload power. Small modular reactors are being deployed across the developing world. Advanced reactor designs promise safer and more efficient nuclear power. China is building dozens of new reactors. India has ambitious nuclear expansion plans. Even the United States is finally ending decades of stagnation in nuclear deployment. All these reactors need uranium fuel, and supply is limited. Kazakhstan currently produces about 40% of global uranium, but demand is rising faster than supply. Uranium prices have already increased significantly from lows of $20 per pound in 2016 to $65 today. And they're projected to potentially reach $150 to $200 per pound by the mid-2030s if nuclear expansion continues as planned. At those prices, Greenland's uranium reserves, approximately 229 million pounds just in the Kvanefjeld deposit, could be worth $40 to $60 billion. Add in the strategic value of not depending on Kazakhstan or Russia for nuclear fuel, and the value increases further.
So with $12 trillion at stake, who's actually positioned to extract this wealth from Greenland? This is where the geopolitical competition gets brutally clear. There are essentially 4 players in this race: the United States, China, Europe, led by Denmark, and Greenland itself. Each has different strategies, different advantages, and different endgames. Let's assess who's actually winning.
The United States has obvious advantages: existing military presence through Thule Air Base, significant financial resources, technological capabilities, and historically close relationship with Denmark through NATO. American mining companies have expertise, American investors have capital, and the Pentagon has strategic interest. But America also has massive disadvantages that are entirely self-inflicted. Trump's approach has alienated Greenlandic public opinion, fractured relations with Denmark, and made American partnership look like imperialism rather than mutual benefit. By threatening to buy Greenland or take it by force, the United States has positioned itself as exactly what Greenlanders fear: a colonial power seeking to control their territory. Public opinion polls show 85% of Greenlanders oppose becoming part of the United States. That's a catastrophic starting point for any partnership. Additionally, American mining companies are risk-averse and require high returns on investment to operate in challenging Arctic conditions. Without government subsidies or strategic support, many American companies simply won't invest in Greenland because the economics are marginal compared to easier mining opportunities elsewhere. The U.S. government talks about Greenland's strategic importance, but has committed relatively little actual development capital. Reopening the Nuuk consulate is diplomatic symbolism, not economic strategy. Meanwhile, China has taken the opposite approach: patient, respectful, and capital-rich. Chinese state-owned companies have been investing in Greenland for 15 years through mining partnerships, infrastructure proposals, and economic ties. China offers billions in development funding with minimal political conditions. Chinese companies are willing to accept lower returns and longer time frames because they're playing a strategic game, not a quarterly profit game. Most importantly, China approaches Greenland as a partner seeking development, not as territory to be acquired. This resonates much better with Greenlandic leaders who want independence and economic development, not a new colonial master. China faces its own challenges: geographic distance from Greenland, lack of military presence, and suspicion from Danish and American governments who pressure Greenland not to accept Chinese investment. The airport construction deal that China proposed was blocked by Denmark under American pressure. Mining projects with Chinese backing face regulatory obstacles. But these obstacles haven't stopped Chinese positioning. They've just made it more subtle. Chinese companies invest as minority stakeholders in Australian or Canadian mining firms operating in Greenland, providing capital without being the visible face of operations. Chinese rare earth processing facilities offer contracts to process Greenlandic ore, creating supply chain dependencies without requiring Chinese political control of mines. China is building economic tentacles that will be nearly impossible to remove, even if Greenland maintains political independence. Europe, led by Denmark, is in the most complex position. Denmark currently controls Greenland's foreign policy and defense, while Greenland has autonomy over natural resources and domestic affairs. Denmark provides the $650 million annual subsidy that keeps Greenland's economy afloat. This gives Denmark significant influence, but that influence is declining as Greenland moves toward independence. Danish public opinion is skeptical about spending billions to develop Greenlandic infrastructure when Denmark has its own economic challenges. European governments collectively could pool resources to invest in Greenland, but Europe is dealing with the Ukraine war, energy crisis, defense spending increases, and economic stagnation. Committing tens of billions to Greenland development is politically difficult when European populations are facing austerity. Europe's strategy seems to be defensive, trying to block Chinese and American unilateral moves while hoping to maintain the status quo as long as possible. This is not a winning strategy when the other players are actively working to change the status quo. Then there's Greenland itself, the player with the most direct interest but the least immediate power. Greenland's political class across the spectrum wants independence from Denmark, economic development, and respect for Greenlandic sovereignty and culture. The island cannot achieve independence without replacing Denmark's subsidy, which requires developing the economy through mining, fishing, and tourism. Mining represents the only realistic path to generate enough revenue for independence. This means Greenland needs foreign investment and foreign expertise to develop its resources. It cannot do it alone. The question is, which foreign partners? Greenlandic leaders are trying to play major powers against each other, accepting investment from whoever offers the best terms while maintaining political independence. This is a smart strategy, but extremely difficult to execute. Small nations that try to balance great powers often get crushed when those powers decide to force a choice. Greenland's population is deeply divided about development. Some Greenlanders want rapid mining development to enable independence and economic prosperity. Others prioritize environmental protection and traditional ways of life, opposing large-scale mining that could damage fragile Arctic ecosystems. The Kvanefjeld mining project was stopped by Greenland's parliament due to environmental concerns about uranium byproducts, showing that local politics can block even economically valuable projects. This internal division makes Greenland's trajectory unpredictable. The most likely outcome is that Greenland achieves independence sometime in the 2030s, accepts Chinese investment, because that's the only source offering sufficient capital, develops mining operations with Chinese companies as major stakeholders, and discovers 20 years later that economic dependence on China constrains its political independence just as much as Danish control ever did. Greenland will have traded one form of dependence for another, except the new master is 8,000 miles away and operates by very different rules than democratic Denmark. The United States will maintain military presence through Thule Air Base, but will have limited influence over Greenland's economic trajectory because American companies weren't willing to invest at the scale required, and American diplomacy alienated Greenlandic public opinion. Europe will provide some development assistance, but not enough to compete with Chinese capital. The end result is that China wins the economic competition, America maintains military presence through legacy arrangements, and Greenland gains nominal independence while becoming economically integrated with China. The $12 trillion in resources will be extracted over the coming decades, but the benefits will flow primarily to Chinese state-owned enterprises, Chinese processing facilities, and Chinese supply chains. This is how great power competition ends in the 21st century, not with military conquest, but with economic positioning and supply chain control. Let's bring this back to why it matters for you. Because understanding the Arctic resource competition isn't just about geopolitics. It has direct implications for your investments, your energy costs, your technology purchases, and the global economy over the next 30 years. The $12 trillion figure we've been discussing isn't just big numbers. It's the foundation of the entire 21st century economy. Rare earth elements from Arctic sources will determine whether the green energy transition succeeds or stalls. If Greenland's rare earths are developed and processed outside Chinese control, it breaks Beijing's monopoly and enables massive expansion of electric vehicles, wind turbines, and green technology. Prices for these products decrease, adoption accelerates, and the climate goals actually become achievable. If Greenland's rare earths end up controlled by Chinese companies and processed through Chinese facilities, Beijing's stranglehold on green technology continues and likely strengthens. This means China controls the pace and distribution of the energy transition. Western nations remain dependent on Chinese supply chains for the technologies meant to provide energy independence. This is the paradox. You cannot achieve energy independence through solar and wind without rare earth independence, and rare earth independence requires Greenland or similar large-scale sources outside Chinese control. For investors, the Arctic resource boom represents one of the largest capital deployment opportunities of this century. Mining companies positioned in Greenland will generate enormous returns as projects come online in the 2030s and 2040s. Rare earth processing facilities will be extraordinarily profitable as demand surges. Arctic shipping companies and port operators will benefit from the new trade routes. Defense contractors supplying Arctic military equipment will see steady demand. But timing matters enormously. The companies and investors who position themselves now, during the early stage when projects are being scoped and capital is being raised, will capture the biggest returns. Waiting until mines are operational means paying premium valuations for proven assets. The opportunity is now, but it requires looking past current political noise to see the underlying resource dynamics. Most investors are still completely unaware that Greenland even matters, which means early movers have significant advantages. For consumers and taxpayers, Arctic resource development will affect prices for everything from smartphones to automobiles to electricity. If rare earth supplies expand through Greenlandic production, prices for electronics and green technology decrease. Your next electric vehicle becomes more affordable. Electricity from wind farms becomes cheaper. If Arctic oil and gas are developed, energy prices potentially stabilize rather than spiking as conventional reserves deplete. This cushions the economic transition away from fossil fuels. Conversely, if Arctic resources remain undeveloped or controlled by hostile powers, prices rise and shortages appear. The green transition stalls because materials are unavailable or unaffordable. Energy costs surge as conventional supplies decline without adequate alternatives. The difference between these scenarios is trillions in consumer costs and economic growth. For American national security, the stakes are even higher. If the United States fails to secure alternative sources of rare earths and continues depending on Chinese supply, American military production remains vulnerable to Chinese cutoffs. Every advanced weapon system depends on materials that China could restrict at any moment. This is an unacceptable strategic vulnerability that undermines American defense regardless of how many aircraft carriers or missiles exist. Without rare earth security, American military capabilities degrade over time as existing equipment wears out and cannot be replaced. The Arctic competition also determines the shape of 21st century alliances and power blocks. If the United States maintains strong partnerships with Denmark, Greenland, Canada, and European Arctic nations, it preserves the Western Alliance and contains Chinese expansion. If American unilateralism alienates these partners, the alliance fractures and China gains influence over Arctic resources and shipping routes. This isn't hypothetical. It's happening right now as Trump's threats push European nations toward independent Arctic strategies and Greenland toward non-American partners. The geopolitical order for the next 50 years is being determined by decisions made today about Greenland and Arctic resources. So what's the bottom line? The $12 trillion in Arctic resources aren't a theoretical future possibility. They're being positioned for extraction right now. Climate change is opening access. Green energy demand is creating unprecedented mineral needs. Supply chain security is forcing diversification away from Chinese sources. The convergence is happening, and the window to establish position is narrow. China has been playing this game for 15 years and is positioned to win the economic competition. The United States has superior military position, but has catastrophically mismanaged the diplomatic and economic dimensions. Europe wants to maintain control, but lacks resources to compete effectively. Greenland wants independence, but will likely trade Danish dependence for Chinese dependence without realizing it until too late. The race for Arctic resources is the most important economic and strategic competition of this decade, and most people aren't even aware it's happening. By the time mainstream media and conventional analysts start writing about Arctic resources in 5 years, the positions will already be established and the winners determined. The $12 trillion will be allocated, the supply chains built, the dependencies locked in. This is your opportunity to understand what's really happening while the world focuses on diplomatic theater and political noise. Follow the money, follow the resources, and follow the long-term strategic positioning. That's where the real story is, and that's what they're not telling you about Greenland. The Arctic takeover isn't coming, it's here.